This is the worst fall of the dollar in the past half-century. China has just offloaded billions of dollars in US debt. On Wall Street, they are already calling it the Sell America moment. Something serious is shifting, and very quickly. Countries that once upheld the US financial system are now quietly stepping away. At the same time, American investors are losing confidence and moving their money overseas. Why? Because the pillars supporting the dollar are beginning to collapse. In this video, we'll uncover China's hidden moves, reveal the numbers Wall Street prefers to avoid, and explain why all this could mark the beginning of a global restructuring. So don't go anywhere. In the first 6 months of 2025, the dollar lost 10.8% of its value compared to other major currencies. That means if you had about $1,000 in January, by July, they would be worth only $890 on the global market, a loss of more than $100. And most people didn't even notice. It may sound like just another statistic, but in reality, this is the worst start to a year for the dollar in more than 50 years. The last time anything similar happened was in 1973, when the US abandoned the gold standard and the Bretton Woods system collapsed. Few expected such a turn. Headlines flashed by, but the true meaning slipped past the general public. This wasn't a one-time panic or a single crisis. It's the result of a dangerous mix: aggressive trade policy, uncontrolled government spending, and a sharp decline in trust that the US can manage its economy responsibly. And no country has expressed that lack of trust more clearly than China. While Trump waved around tariffs in his trade war, China moved more quietly and far more dangerously. In April 2025 alone, Beijing secretly sold $8.2 billion in US Treasury bonds. The news came out only recently, but it wasn't just an economic move, it was a message. China no longer wants to support the US financial system. It was, of course, a reaction to Trump's policies, but also part of a broader strategy. For years, China has been working to reduce its dependence on the dollar, and the April sell-off showed they're now serious about it. What's especially alarming is that China has a long history of such actions. Since 2012, it has been gradually reducing its US debt holdings. Back then, China held over $1.3 trillion in US government bonds. As of April 2025, it holds just $757 billion. That's a drop of 44% in 13 years. In essence, China has already sold off over $600 billion in US debt. And what happens if other countries follow its lead? It will become harder and more expensive for the US to borrow money, and that threatens the entire system. With only $757 billion of US assets remaining, China is likely to keep selling, focusing instead on its domestic economy. And that's why this may not just signal a fall of the dollar, but the beginning of a collapse in the entire US economy. The US government is spending far more than it collects in taxes. To cover this gap, the US constantly borrows money, primarily through the issuance of Treasury bonds. These are essentially IOUs, lend us your money now, and we'll pay it back with interest. When countries like China, Japan, or the United Kingdom buy these bonds, they are not just investing, they are financing the very operation of the US government. That money goes to the military, pensions, and public programs. As of today, the US national debt has surpassed $37 trillion. Every year, hundreds of billions must be borrowed just to stay afloat. And this is where the threat emerges. The entire system depends on one fragile hope, that there will always be buyers. Yes, the dollar is still the world's main reserve currency. Over half of the world's central banks hold reserves in dollars, and Treasury bonds are considered a safe asset. But that dominance is no longer guaranteed. Cracks are becoming too visible. If countries start offloading US bonds en masse, due to fears of inflation, political instability, or simply a desire to escape US pressure, the consequences will be serious. America would be left with two bad options: either raise interest rates and make its debt even more expensive, or print more money and fuel inflation. Neither path leads to a good outcome. The Treasury bond market is the foundation of the entire US financial system. If it cracks, borrowing halts. And without borrowing, the government simply cannot function. That means public services stop, salaries go unpaid, programs are frozen, and even default becomes a real risk. Something that once seemed unthinkable for the world's strongest economy. While the world was distracted by interest rate hikes, trade wars, and falling markets, China was making its move, quietly and without noise. It was shedding dollars and buying up gold in massive amounts. Over the past 3 years, the People's Bank of China has acquired more than 210 tons of gold. According to Goldman Sachs, China is now buying around 80 tons per month, worth approximately $8.5 billion, and it does not appear to be slowing down. This is one of the largest gold acquisitions by any central bank globally. At the start of 2025, China's official reserves exceeded 2,300 tons. But there's a catch. Experts believe the real number could be even higher. Some may be hidden through state banks or bought abroad outside official statistics. But why gold? And why now? Because gold is reliable. It belongs to no country. It cannot be devalued by a president's speech or a Federal Reserve decision. It cannot be made worthless by a mistake in Washington. Gold is the oldest and most proven way to preserve wealth. It cannot be printed, frozen, or sanctioned. China has learned a hard lesson. The dollar can easily be turned into a weapon. The US has used it this way many times, cutting off countries from SWIFT, imposing tariffs, threatening economic sanctions. Beijing saw how dangerous it is to rely on the dollar, and it quietly began to shift course toward gold. And the scale of this shift is massive. Wealthy Americans are also showing they no longer believe in the direction their country is heading. Billionaires, top executives, major investors, they are not just diversifying anymore. They are moving money out of the United States in large volumes. The year started off with some optimism. Inflation had slowed slightly. Markets hoped for a soft landing, but by summer, everything had changed. Major US fund managers began shedding dollars. On Wall Street, this has been dubbed the Sell America moment, a clear signal that confidence in the system is crumbling. The reasons, of course, are Donald Trump's unpredictable policies, aggressive trade moves, and ongoing conflicts with allies. A Gallup poll paints a grim picture. More than half of Americans believe their financial situation is getting worse. Fewer than 1/3 believe the market will recover anytime soon. And this is not just about sentiment, it's what people are actually feeling. Meanwhile, the wealthy are not waiting, they are acting, shifting assets into European stocks, buying gold, and acquiring second passports. According to recent data, the number of Americans seeking foreign investor visas and second citizenship has increased by more than 1,000% since 2020. BNP Paribas has confirmed that many Asian family offices are selling off US equities and reallocating to the markets of Japan, China, and Europe. And they are doing so openly. They are calling it not an escape, but a rebalancing away from American risk. According to Bank of America, nearly $9 billion was pulled from the US stock market in just 1 week. This is not just a bad week for Wall Street, it's a clear sign that global confidence in the US economy is fading. Investors are rapidly shifting their capital abroad. Japan and Europe are the biggest beneficiaries. Japan alone attracted $4.5 billion, a record since April of last year. Europe drew in over $3 billion during the same week, but it's not only about tariffs. Many funds believe that US stocks are overvalued. They were inflated for years thanks to cheap money and stimulus. But now that inflation is receding and interest rates remain high, large capital is seeking more stable and reasonably priced opportunities. Japan has unexpectedly become a safe haven, even though its economy was once considered stagnant. Reforms, price stability, and improvements in corporate governance have paid off. Foreign investors have been pouring money into Japanese stocks for 10 consecutive weeks. Europe is also experiencing a surge. While its politics and regulations are not perfect, they appear far more stable than the volatility in the US market. Additionally, governments are investing in infrastructure, energy, and defense, and more investors are beginning to see these not as risks, but as opportunities. What's especially interesting is that foreign investors have not completely turned away from the United States, at least not yet. The same Bank of America report notes that while American investors were selling off assets, foreign players actually poured nearly $4 billion into US equities. However, this optimism did not extend to other assets. US Treasury bonds saw their largest weekly outflow since 2020. Even gold didn't hold up. It posted its first weekly outflow since January. This indicates that investors are rethinking where it's truly safe to park their capital. What we're witnessing is no longer just a reshuffling within the US market. It's a real departure from it. Europe is emerging as the clear winner. In 2025 alone, over $100 billion has flowed into European funds and equities, 3 times more than in the same period last year. Meanwhile, the United States saw outflows of $87 billion during the same time frame. It's not just money that is leaving. The entire mindset is shifting. The myth of American exceptionalism, the belief that the US economy will always lead the world, no longer holds the same weight it once did. Today, it all comes down to stability and clear, long-term rules. And in this new environment, it is Europe and Japan that are coming out ahead. Even Bank of America is adapting to this reality. The bank is overhauling its entire trading infrastructure in Europe to ride this new wave of capital. Their goal is to break into the top 3 players in the European market. And this is not a bet on a temporary rebound. It's preparation for a long-term reorientation of global capital away from the United States and toward more predictable regions. The key question now is this a short-term flight or the beginning of a global restructuring? Will the US government be able to shift course and regain trust, or are we already witnessing the world turning decisively in another direction? One thing is clear. The old assumptions about the United States as the world's primary magnet for capital are starting to crack. And for the first time in decades, investors are openly searching for alternatives. And this is just the beginning. To stay ahead of this economic shift, subscribe to the channel and turn on notifications. The next headline could be even more explosive.